The Nightly Business Report.
Good evening. Tonight, Sri Lanka achieves remarkable 2,322 billion rupees total revenue, milestone in first half of 2025. Government invites investment proposals for 99-year lease of Chalmers Granary property in Colombo Fort. Mixed market movements observed amid cautious investor sentiment and economic uncertainty. And Wall Street closes higher with Nasdaq surging over 1%. Apple shares lead market rally.
From Studio 24C, here's Prashansa Gunawardena.
Good evening and welcome to the Nightly Business Report. Sri Lanka's total revenue reached 2,322 billion rupees in the first half of 2025, showing significant growth from 1,861 billion rupees in the same period last year. This increase in both tax and non-tax revenue helped reduce the budget deficit by over 32%, indicating improved fiscal performance.
Sri Lanka recorded a total revenue of 2,322 billion rupees in the first half of 2025, up from 1,861 billion rupees during the same period in 2024. The increase was driven by higher tax revenue, which rose 2,152 billion rupees from 1,709 billion rupees, and non-tax revenue, which increased to 170 billion rupees from 151 billion rupees. The budget deficit declined by 32.3% to 405.6 billion rupees compared to 598.7 billion rupees in the previous year. Revenue collection agencies achieved 46.9% of their annual targets in the first 6 months. The Inland Revenue Department was the largest contributor, accounting for 48.2% of tax revenue, followed by Sri Lankan Customs at 45.6% and the Excise Department. The improved fiscal performance positions the government on track to meet its full-year revenue goals for 2025.
The Central Bank of Sri Lanka purchased $1 billion from the domestic market in the first half of 2025, boosting foreign reserves and market liquidity. Liquidity remained in surplus with excess liquidity at 138.1 rupees by June, supported by the CBSL's foreign exchange purchases totaling over $1 billion. Despite liquidity injections, government repayments and currency withdrawals partially absorbed funds, leading the CBSL to hold open market operations from January 2025. The CBSL also eased monetary policy by cutting the overnight policy rate by 25 basis points and urged banks to support small and medium enterprises with loan concessions. Exchange rate volatility was managed through selective forex market inventions, while the introduction of the Bloomberg Foreign Exchange Matching Platform improved market transparency. The Cabinet of Ministers has approved a plan to invite investment proposals for a 99-year lease of 3.92-hectare Chalmers Granary property in the Colombo Fort. The move aims to attract high-quality investors to develop projects that support Colombo's long-term urban growth and economic development.
The Cabinet Ministers approved a plan to invite investment proposals for a 99-year lease of the Chalmers Granary property in Colombo Fort. This initiative aims to attract high-quality investors who can deliver projects aligned with Colombo's long-term urban developmental goals. Potential developments include residential, healthcare, office, industrial, commercial, educational, tourism, recreational and customer service facilities. The site is considered suitable for large-scale, financially viable projects with strong environmental and social benefits. The proposal was submitted by the Minister of Urban Development, Construction and Housing, Anura Karunatilaka, and received Cabinet approval.
Sri Lanka's newly approved anti-dumping and countervailing duties aim to protect domestic industries such as tile, shoes, leather goods and sanitary clothing industries. The regulations are intended to shield local producers from cheap imports, particularly from countries like China and Thailand, which the government claims and selling below production cost.
Mr. Hadunhetty acknowledged that these industries have long lobbied for protection, often avoiding export competitiveness while burdening local consumers with high prices. The anti-dumping law was initially introduced in 2018 under the Yahapalne government, which has simultaneously provided trade liberalization. Hadunhetty defended the move as means to preserve jobs and support domestic manufacturing, despite concerns over protectionism and consumer impact.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Sri Lanka's stock market showed mixed movements today, with the ASPI gaining slightly while the S&P/SL 20 edged lower. Investors remain cautious amid ongoing economic and global developments. For further insights, we speak with Salama Sanoon from First Capital Holdings.
Thank you, Prashansa. The Colombo Stock Exchange continued to build up on the positive momentum from yesterday as it concluded in positive territory once again, contrary to how the week began. The All-Share Price Index gained 22 points today and wrapped up for this shortened week at 19,827. The index experienced high volatility today amid subdued engagement from both retail and high net worth participants. Today's turnover amounted to 3.3 billion rupees, marking a 52% decrease from the monthly average of around 6.8 billion rupees. The diversified financial sector dominated turnover, contributing 23%, followed by the capital goods and banking sectors with a combined contribution of 33%. The top three gainers for the day were Haley's Fibre, SMB Finance Voting and Agarapatana Plantations, whereas the top three price losers were Tess Agro Non-Voting and Tess Agro Voting, followed by Bairaha Farms PLC. Thank you.
Sri Lanka's Consumer Price Index today reflected the changes in the prices of goods and services, indicating current inflation trends. This data is crucial for understanding the cost of living and economic conditions impacting households and business across the country. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Prashansa. Sri Lanka's inflation outlook continues to shift as the latest number from the Department of Census and Statistics reveals a further easing of deflationary pressures in July 2025. The year-on-year change in Colombo Consumer Price Index, or the CCPI, recorded a headline deflation of 0.3% for July 2025, an improvement from 0.6% deflation recorded in June 2025. This marks the fifth consecutive month where the countries experience softening deflation trend. Breaking it down, food inflation moderated sharply to 1.5% year-over-year in July compared to 4.3% recorded in June 2025. Meanwhile, non-food deflation also eased to 1.2% from 2.8% recorded in the previous month. On a month-over-month basis, the index slight dip of 0.2%, mainly due to the food prices, which contributed negative 0.86 percentage points to the index. The core inflation rate, which excludes the volatility in food and energy prices, rose slightly to 1.6% in June from 1.5% in June 2025, suggesting that the underlying demand side pressure is gradually picking up. According to the central bank, this data suggests that the temporary period of deflation that began in September 2024 is slowly coming to an end, and looking forward, the inflation is expected to gradually diverge towards the 5% target set by the Central Bank of Sri Lanka. Thank you.
Gold prices edged higher today, aided by growing safe haven demand after fresh tariff threats from US President Donald Trump and weak US economic data, which renewed bets on a Federal Reserve interest rate cut. Spot gold edged up 0.1% to $3,373.80 an ounce, while gold futures for December gained 0.4% to $3,447.90 an ounce. Elsewhere, platinum futures rose 1% to $1,353.70 an ounce, while silver futures jumped 0.9% to $38.250 an ounce. Benchmark copper futures on the London Metal Exchange were up 0.3% to $9,719.20 a ton, while US copper futures edged up 0.5% to $4.4328 a pound. Oil prices steady today, pairing early gains after the Kremlin announced that Russian President Vladimir Putin will meet US President Donald Trump in the coming days, raising expectations for a diplomatic end to the war in Ukraine. Brent crude futures were up 21 cents or 0.3% at $67.01 a barrel. US West Texas Intermediate crude gained 20 cents or 0.3% to $64.55. In China, crude oil imports in July dipped 5.4% from June, but were still up 11.5% year-on-year. Saudi Arabia, the world's biggest oil exporter, raised its September crude oil prices yesterday for Asian buyers, the second monthly rise in a row on a tight supply and robust demand. Trump imposed an additional 25% tariff on Indian goods yesterday, citing the country's continued imports of Russian oil. The new import tax will take effect on August 28th. Trump also said he could announce further tariffs on China. The Sri Lankan rupee has slightly changed against the US dollar today compared to yesterday. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has reduced from 297 rupees and 10 cents to 297 rupees and 05 cents, while the selling rate has increased from 304 rupees and 61 cents to 304 rupees and 71 cents. However, the Sri Lankan rupee has depreciated further against a basket of foreign currencies, while it has appreciated against Gulf currencies. Let's take a closer look on how the Sri Lankan rupee has performed among other major global currencies. Short break now. This is the Nightly Business Report. Welcome back. Samaki Spices Exports Private Limited has made a significant export of 2,500 kilograms of GI-certified organic Ceylon cinnamon to the European Union, marking the largest shipment since GI certification. The company, a leading Sri Lankan spice exporter, emphasizes the vast potential for foreign exchange earnings.
Samaki Spices Exporters Private Limited, established in 1969, is a leading exporter of Ceylon cinnamon and recently shipped 2,500 kilograms of GI-certified organic Ceylon cinnamon to the European Union. This shipment is the largest quantity exported since Sri Lanka obtained GI certification for cinnamon. Chairman Janaka Abhiratna highlighted the significant potential for earning foreign reserves through spice exports, especially in high-quality value-added products. The company also exports pepper, cloves and essential oils to markets including South America, the EU, USA, Canada and Australia. Supported by a network of 600,000 farmers, the company operates several processing factories and collection centers to ensure consistent quality.
Fonterra Brands Lanka, in partnership with TVEC, NITA, the Department of Labour and 8 other dairy industry leaders, has introduced Sri Lanka's first national competency standard for dairy machine operators.
The initiative, developed over a year, aims to formally recognize the skills of experienced machine operators in the dairy sector. The standard will be implemented through NITA's training network, expanding access to formal qualifications nationwide. The handover ceremony was attended by Deputy Minister of Vocational Education, Nalin Hevage, who praised the collective efforts of the stakeholders. The competency standard sets a national benchmark for vocational training in the dairy industry, bridging practical expertise with formal standards.
Heli's Mobility has entered Sri Lanka's electric and hybrid vehicle market through an exclusive distribution partnership with China's Chery Automobile, bringing premium Omoda and Jaiku NEV brands to the country.
Haley's Mobility, a subsidiary of Haley's Fenton's, has partnered exclusively with China's Chery Automobile to distribute Omodo and Jayco electric and hybrid vehicles in Sri Lanka. The agreement grants Haley's full franchise rights to these premium new energy vehicle brands, marking a significant step into the growing EV market. To support the adoption, Haley's has teamed up with StarCharge to establish a nationwide fast charging network addressing key infrastructure challenges. The first models to launch include the Omoda E5 and Jayco J6 and J7, catering to urban, premium and off-road segments. This partnership reflects Haley's commitment to sustainable innovation and advancing green mobility solutions in Sri Lanka.
INSEE Cement has partnered with the Sri Lanka Institute of Nanotechnology to launch a collaborative research program focused on sustainable innovation in Sri Lanka's construction sector. The Memorandum of Understanding was signed at a ceremony attended by senior leaders from both organizations.
INSEE Cement aims to develop low-carbon, future-ready construction solutions through this partnership. This collaboration will help advance INSEE's product portfolio with an emphasis on sustainability and performance excellence. Both organizations are committed to co-developing environmentally responsible solutions that set new industry standards. The strategic alliance reflects their shared vision to drive meaningful progress and resilience in Sri Lanka's construction industry.
SEAT has been ranked the most valuable Thai brand in Sri Lanka for 2025 by Brand Finance, reaffirming its leadership in the automotive sector. The brand also secured its position in the sixth strongest consumer brand in the country with a 15% increase in the brand value.
SEAT has reaffirmed its leadership in Sri Lanka's tyre industry by ranked the most valuable tyre brand in Sri Lanka for 2025 by Brand Finance Lanka. The brand's value rose by 15% to 2.325 billion rupees, earning its 44th place among Sri Lanka's 100 most valuable brands. SEAT was also ranked the sixth strongest consumer brand in the country with a brand strength index score of 83.3 and retained its AAA rating. SEAT's success is backed by strong consumer trust, a strategic focus on quality and innovation, and its comprehensive marketing and product development initiatives.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Global equities rose today with Japanese shares hitting a record high as tech led gains on Wall Street upbeat earnings, growing hopes for a ceasefire in Ukraine and expectations for US rate cuts boosted sentiment. Japan's broad topics index rose 0.7% to record closing high, with the more tech-focused Nikkei also gaining by about the same. The Kospi added 0.6% with South Korea's top trade envoy saying Samsung. Hong Kong's Hang Seng rose 0.5%, although mainland Chinese blue chips were only slightly higher on the day. US stocks ended higher today, led by more than 1% gain in the Nasdaq as Apple shares climbed after news of its plans to announce a domestic manufacturing pledge and as some companies delivered upbeat earnings reports.
U.S. stocks ended higher on Wednesday, with the Dow ticking up about 0.2%, the S&P 500 adding nearly 0.75%, and the Nasdaq leading gains with a more than 1% rise. Shares of Apple jumped 5% to provide the biggest boost to all three major indexes after a White House official said the tech giant will invest another $100 billion in its domestic manufacturing. Wednesday's gains followed a losing day for the stock market and a steep decline on Friday after major downward revisions to U.S. job growth. Among other movers, shares of Lyft, down more than 3% at the close, fell even further in extended trading after the ride-sharing service reported second-quarter revenue that missed estimates, pressured by mounting competition from Uber and softening U.S. travel demand. Shares of Snap plummeted 17% after the Snapchat parent reported its slowest quarterly growth in more than a year, hurt in part by a glitch in its ad-buying platform that resulted in ads being delivered at discounted rates. And shares of Arista Networks soared more than 17% after the cloud networking company projected current quarter revenue above estimates.
Sony raised its full-year operating profit forecast by 4% to $9.01 billion, citing expectations of a small impact from US President Trump's trade war.
Sony raised its full-year operating profit forecast on Thursday. It now sees a rise of 4% to reach just over $9 billion. The Japanese tech giant expects a smaller impact from President Trump's trade war than previously thought. Sony projects a tariff hit of just under $477 million, well down from an estimate of $680 million it made in May. The company said the new numbers are based on tariff rates as of August, but cautioned the situation was still fluid. Sony also said it sees a stronger profit outlook at its games business. The group reported a 36.5% rise in operating profit to $2.3 billion for the April-June quarter, well ahead of analyst forecasts. It sold 2.5 million PlayStation 5 game consoles in the first quarter, up 4% from a year earlier. Quarterly operating profit of the games business more than doubled to around $1 billion. It was due to higher sales of network services and games not made by Sony. Investors liked what they heard, and company shares jumped 5% in afternoon Asian trade.
That wraps up today's Nightly Business Report. We value your opinion. Share your thoughts and feedback with us through email at feedback.ad24english@derana.lk or via WhatsApp at 07680579933. We will see you again tomorrow with the latest updates in the business globe. Vinod Surya will join you next with other Derana Sports Central. Until then, I'm Prashansa Gunawardena. Thank you for watching and have a good night.